All right, here we go. Long-term analysis on Bitcoin, looking at the logarithmic growth curve zones. Wow. All right. So you'll notice right away that you kind of have three colors that are going on here. Green, yellow, red at the top. What's going on since the inception of Bitcoin is you'll notice that the price just kind of seems to oscillate up and down within these bands. So you're typically looking for a top in or at the top of the red band, and that's the end of your cycle, where the price will come moving down into the green band, which is long forms of accumulation. The yellow band is like, how would you describe that? Kind of like a take profit area / reposition area, but the end of your cycles are in red and the bottoms of your cycles are in green. So over time, you will be able to notice the repeating trend of it ends in red and it bottoms out in green. Now, the coronavirus dump, black swan events. These little lower red lines in this area, the only other time it's ever actually touched that, besides the coronavirus dump, was basically back about a couple years after its inception. But you'll notice that it was bought up at that level extremely harshly. So if you use that general logic and theory that you accumulate in green and you sell in red, and you zoom out and start to project into the future, looking for, of course, your endings of the cycles in red. I mean, shoot, if it were to go up into the red zone, it's not going to happen right now, of course, but the upper red zone right now is currently $150,000. So, my favorite saying, discount. So let's really get in close here. Looks like we're nearing the bottom of this green band. Could be even headed for this red band. So if we did see anything, another black swan event, because let's all be honest right now, the world's pretty fucked. You'd be looking for something as low, 20,000s. I have reasons why there are levels at about 19,000 that could be reached, and I can get into that very shortly. But let's assume that somewhere around 33,000 could be your nearing bottom, or let's come back out, and there are one reason that, okay, it's not on this chart. It's on this chart. Okay, this is my bearish chart. Not good. Let's put it on regular. Hopefully that fixes things. Oh, Jesus. Not good. All right. So, thing is, you definitely have to look at the market in both directions. My bearish chart is pretty bearish. We closed that gap already right over here. We're breaking out of what looks like to be one giant bear flag. If you were to just classically move it down from the, you're not going to like this. I know I'm not. This does not have to happen. However, yeah, I don't see that happening. But if you were just using classical technical analysis theory, playing that as if it was a bear flag, that would be your technical breakdown target, which I do not believe is going to happen. I have it here just in case and have been watching it. I should maybe probably pay a little bit more attention to it and be a little less biased. But gaps at about 18,340 is your lower one. I think that's all I got that hasn't been closed. Yep, that's everything that hasn't been closed. And then 23,930 to 26,000 is your next range, which that, if you were to just flip on your log zones, would come into, you know, right where we were looking at before with the bottom red lines there. And I need to turn that back on. Yeah, that would naturally line up with that right about there. So maybe it does flush lower and closes the other gap, which we can't see at the moment, but I think we said it was around 19,000. Keep some cash on hand on the side just in case. And yeah, let me know what you guys think.